At what point, Mike, do you think we can move up our trading amount? Great question, Memphis Street Doc. And I love that you're asking me this question because that means you're having success. I love it. When it's time to increase the amount that you trade with, right? We're talking about increasing your risk. When we talk about increasing your risk, I don't think that people should really start to move your risk higher until you've been able to lock in a minimum of 1 month of consistent profitability. 1 month of consistent profitability, I think that's the absolute bare minimum. Bare minimum. And preferably maybe even 2 weeks. 2 months before you start to move that risk. Now, here's what I will tell you. The proper way to move your risk higher. A lot of people do this wrong. Let's say you normally risk $100 per trade. Just using that as an example. If you risk $100 per trade, that means if you're wrong on a trade, you're going to lose $100. That's proper risk management. The incorrect way is to say, oh, every trade I make, I'm just going to put $2,000 into the trade. And if I'm wrong, I'll lose whatever that number is. That's the complete wrong way to manage your risk. The proper way is to say, I'm going to lose $100 if I'm wrong. And based on your entry to your stop loss, you adjust your position size in every trade. So if you get stopped out, you lose $100. That's the proper way to do it. So if you've been consistently profitable for, let's say, 1 or 2 months at $100 risk, then you decide and you say to yourself, okay, it's time for me to move my risk higher. Do it in 25% increments. So if you were risking 100, start risking 125. And when you do that, stay there for a minimum of 2 weeks and make sure you are still profitable for those 2 weeks. At that point, then move it up another 25%. Stay there for a minimum of 2 weeks. Make sure you are profitable for the 2 weeks and then move it up another 25%. The reason why you want to climb the ladder that way and go one step at a time in those small increments is to ensure that 2 things. 1, emotionally, you feel okay with the new risk. Because emotionally, you don't want to go from risking $100. Now all of a sudden you're risking $300. That's too big of a difference. Your emotions will get the best of you. You're going to start to make mistakes. And you're going to start to trade off of those emotions if that is the case. And that's when you guys can get yourselves into trouble. So you want to make sure you do it little by little. So there's not a big difference between 100 and 125, right? Mentally, psychologically, emotionally. That's reason number 1. Reason number 2, you have to make sure that your P&L has a chance to catch up to your new risk. What do I mean by that? If you went from risking $100 on a trade and then all of a sudden you start risking $300, there's an air pocket. Because if you're risking $100 with your position size, that means that when you're right and you're making winning trades, maybe you're making $150, $175, $200. And when you're wrong, you're losing $100, right? So if that's the case, and all of a sudden you bump your risk to $300, you make 2 losing trades. You just wiped out 1 to 2 weeks of profit. Just like that. That's why you can't make big jumps like that, because then what happens when you wipe out 2 weeks of profit like that, all the confidence that you had that made you increase your risk in the first place, it all gets wiped out and you guys start back at 0. If you go from 100 to 125, now all of a sudden your winning trades are going to be 175, 200, 215. Then you go from 125, let's say, to 150. Now your winning trades are 225, 250, 270, right? Then you go from 150 to 175 or 200. And when you slowly start to climb the ladder like that, you have to give yourself the 2 weeks of profitable trading at the new size to build the profitable trades, because now, yes, you're risking more, but now you're going to be making more when you're right. That gives you the time to build a cushion in your P&L so that when you get to $200, $250 risk and you take a couple losses, you've built up your balance in your P&L and it can absorb those losses. So this way, when you take 1, 2, or 3 losing trades at the higher risk, it's not wiping out 2 weeks of profit, because that will crush you psychologically. You will feel so defeated and you'll be like, man, I just did all that work for nothing. That's why it's so important to increase your risk that way. So I hope that was helpful, Memphis Street Doc. I hope that was something that you guys all understand, and I hope that was helpful.